Hey there, everyone. Dave Keller here with Market Misbehavior. We're recording this video on Friday, June 12th, SpaceX IPO launch day. So what exactly are we doing not talking about technology? Well, I'm here to remind you that while all the euphoria is bubbling over for this new IPO, the largest in history, and once again sort of injecting renewed euphoria into the AI trade, there are a lot of stocks and a lot of other sectors doing quite well. Today, we're going to use the Seeking Alpha platform to break down some of the leadership themes and then use their quantitative model to identify some stocks outside of technology that seem to be doing just fine and potentially could give us an opportunity to diversify away from tech, which is currently about 40% of the S&P 500 benchmark. Starting with the market data page here on Seeking Alpha, do you know which of the major U.S. benchmarks has performed best over the last 1 month? It's not the S&P, it's not the NASDAQ, it's the small cap indexes. Here we're looking at the IJR, which is the small cap S&P 600 ETF, up 3.6% versus the S&P down 0.2%. Best performing sector over the 1 month, obviously technology. No, it's healthcare, up 7.7%. Here's tech at number 2 at 3%. Here's financial services, number 3 at 2.8%. So why am I starting here? Well, the fact that small caps are outperforming large caps, and that's not just for the last month. If you look year to date, you're going to find that small caps have also outperformed the S&P and the NASDAQ just fine. This year so far has been small over large. It's not been as much about the mega cap space as you might think. Small caps have actually done very, very well. Breadth indicators are holding up there okay, which tells us there might be some opportunities outside of mega cap growth. The fact that healthcare is number 1 shows you that there are plenty of stocks and sectors outside of technology doing very, very well. And that's why we want to make sure that we take off the blinders. Don't just focus too much on the AI trade, but think about opportunities that might be bubbling up elsewhere. But you know, out of the factor ETFs that we're showing here, which one has performed best over the 1 month? It's the Momentum Factor ETF, edging out the Dividend Growth ETF for the top performer for the last 1 month. Year to date, you will see that the Momentum Factor ETF is the top performer as well. Now, this is an ETF based on a momentum factor, basically mean you're consistently going into the top performing stocks. Strength begets further strength. So we can continue to find stocks showing strong momentum characteristics. We should be able to ride that momentum to further momentum. Strength begets further strength. So with that in mind, what we're going to do today is use the quantitative model, actually using the scan feature or the screens on Seeking Alpha to identify some individual names that look pretty compelling. Now, I've actually taken the scanning tool and set up a scan ahead of time, and I'll explain to you what I did here very, very quickly. What I did was basically say, here, let me look at the filters. I'm looking for just mid cap, large cap, mega cap. So I'm actually ignoring small caps for this particular screen, but please feel free to run a scan like this using Seeking Alpha and look at the small cap space, because as we mentioned, that's where there's a lot of really interesting opportunities. But I just want to make sure I stuck with stocks that many of us probably knew already or are familiar with. Now, I've actually selected all of the S&P sectors except for technology, because I want to look for opportunities elsewhere. And again, not that there aren't some great charts in tech, there are, but I'm intentionally looking outside of technology for now. Now, this is really the guts of the screen that I wanted to share with you. Number 1, I want to make sure that the quant model on Seeking Alpha rates this as a strong buy, and that is a systematic quantitative approach, looking at not just momentum, but also earnings growth and quality, looking at valuation, looking at other metrics to, sort of an overall composite rating based on these quantitative factors. So I want to make sure that the model on Seeking Alpha rolls up to one of the top rated names in the universe. But then as a subset of that, just looking at the momentum factor, I want to make sure that it's an A. So an A plus, an A, or an A minus. So I want to find the stocks where the quant model is very strong, but I want to make sure that I filter out anything that isn't showing strong momentum. Because for me personally, I'm a momentum investor. I'm a trend follower. So strong momentum is way more important to me than it may be for other investors. And that's really the benefit of this, right? Of this platform, is using things like their quant rating, but then sort of customizing it and tweaking it based on how you're trying to approach the markets in particular. So When I come up with 92 stocks that score very well based on that combination. VICR is the one that is at the top of the list with a quant rating of 4.98 and a momentum score of A+. So I'm going to start with VICR and then show you a total of 5 names that scored well based on that scan as I was running it today, and just breaking down some of the technical characteristics of these particular charts. And I think you'll see why they score pretty well. So the first one is VICR. Now, some platforms actually bucket this in technology. Seeking Alpha puts this in the industrial sector, so I'm going to follow that. But just so we know, I think this is an example of a lot of charts that just look remarkably strong, right? This is a stock from a technical perspective that has been going up and to the right. This has what I say moving averages in proper order, which means the 21-day EMA is above the 50-day simple moving average. The 50-day is above the 200-day moving average. All of those moving averages are sloping higher. We can see in the last couple of weeks that VICR made a new all-time high around 360. It actually pulled back a bit and undercut the 21-day EMA. But this week, we're seeing a resurgence of optimism. Stocks up about 3% here on Friday, just before the market closed. So as a result, strong uptrend, showing strong characteristics. Higher highs and higher lows are bullish. And on a chart like this, what I just want to make sure is that every time we pull back, I want to make sure we're making a higher low, right? So we made a new all-time high here in April. We then pulled back a little bit to just above the 21-day EMA. We made a new high. We pulled back. We actually undercut it just on an intraday basis, but never really closed below that low, and then made a new high. We made a higher low. So see how we keep making new highs, and then when we pull back, we're seeing dip buyers coming in and buying on the short-term weakness. So as long as those lower highs keep getting higher, as long as those higher lows keep getting higher, this is still a pretty constructive chart. So VICR honestly looks like a lot of technology names that are in these strong primary uptrends. I'm not surprised it scores well based on the quantitative methodology. Second chart's in the industrial sector. This is a heavy construction name called Sterling Infrastructure, ticker STRL. Well, I wanted to highlight this chart in particular. I zoomed in a bit to the most recent data. We can see similar to VICR, it's in a strong primary uptrend, higher highs, higher lows, but we specifically had a gap here. This is when they reported Q1 earnings. So we can see the gap from this point around 550 all the way to an open around 725, and from there it pushed even further, almost to 900. So we had a gap after earnings, and then we had an initial jump for the next 2 sessions. But from there, sort of consolidated a little bit. When you have an earnings gap like this, the post-earnings drift, like what happens after earnings, can be really meaningful. And a lot of times I will think of the upper end of that gap as an initial level of support. So this worked out really, really well here in the third week in May, because we sold off for 2 days. We came right to the 21-day EMA, also right to the top of this price gap. And the fact that we held that, I think, is a great message of optimism, suggesting that investors are buying into that short-term weakness and indeed pushing it to all-time highs. The stock topped out around 1,000 a couple weeks ago. From there, pulled back quite a bit. So while this looks like a little move, these are big percentage swings going from 100 all the way down to 770 just over a week. So this is a higher volatility name, but again, the higher volatility is generally trending higher. That's why I think it's a pretty good chart, generally getting stronger. All right, we'll be back with the remaining stocks to review just in a moment. But before we do that, I do want to let you know that we're using the Seeking Alpha platform for today's video, and they are currently launching their summer sale. Their summer sale is pretty awesome. They're offering 25% off any new accounts. You can find more info at marketmisbehavior.com/SA bundle. We're talking about the bundle today because it combines 2 really powerful parts of the Seeking Alpha platform that is not available for free. You have to be a paid member to access them. Number 1, the premium membership, which gives you access to their quant model, their scanning engine, all of their research, and great insights and portfolio level tools that I find very, very valuable. You also will have access to Alpha Picks, which is where their quant team hand selects 2 names that score well based on their quant methodology, kind of stuff that we're doing today, but that digs into the whole picture, the fundamentals, the earnings, the momentum, the dividends, all of that together. So it's a great way to learn from some market experts how they use a systematic quantitative approach and how they dig deeper and drill down into particular ideas. Again, you can have access to that today if you go to marketmisbehavior.com/SA SA bundle. And again, they're offering 25% off as part of their summer sale. By the way, if you get it set up today, I know their next alpha pick is dropping on Monday, June 15th. So if you get set up here today, you'll have access to that on June 15th. You can also access all the previous picks as well. All right, let's get back to the charts and their implications using Seeking Alpha. You're also going to find some names. This is in the same sector, in the industrial sector. This is CECO. It's a mid-cap name, about a $3.5 billion market cap. And while it doesn't have an earnings-related gap, it did break to a new high. We can see the previous all-time high right around $80 a share in February, broke above there, and then kind of chopped around here. But what I love is this short-term action. This is called a hammer candle. When we have a pullback, long lower shadow, open and close near the highs of the day, we can see we retested that level about a week and a half later, and from there, it's broken to new highs. So look at the failure at $90 a share. Here, look at the failure, $90 a share there in late May. Now early June, we finally break above $90 a share. So on a chart like this back here, where there's clear resistance, I usually set an alert around $90 and wait for that breakout above that $90 level. And we've just seen that play out this week. So this is a stock that scores well, but I would say the momentum is really starting to push to the upside. The RSI remains mostly above 50 going back to the end of March, and I think that's pretty constructive as well. All right, chart number 3, Sezzle, ticker SEZL. This is in the financial sector, sort of a fintech play. And as we can see here, again, another mid-cap name. But what I like about this chart is what we call a change of character. From July of 25 to November of 25, I would say this is a chart in a clear distribution phase. That's my way of describing lower lows and lower highs. Then all the way through December of last year and then really through April of this year, it's been in a consolidation phase, right? The price is generally sideways. Here in April, things start to change and we enter into what I would describe as a new accumulation phase. We start to make higher highs and higher lows. Now, what's really interesting is look at the price momentum below here, right? In a distribution phase, the RSI mostly below 50. In a sideways or consolidation phase, the RSI mostly between 40 and 60. During a new accumulation phase, as the stock breaks above the 200-day moving average, RSI mostly above 50. So you see how the range of the RSI tells us a great deal about the shape and the direction of the trend. RSI generally low, that's a distribution phase. RSI generally high, we're in an accumulation phase. RSI neutral, we're in a sideways phase. So that rotation in April, right, from the end of Q1, beginning of Q2, that upside breakout, breaking above the 200-day, making a new 3-month high, RSI pushing higher, all speaks to an improved trend characteristic and an improving chart. So this is a stock in the financial sector, definitely not overextended relative to some of the technology names, some of the growth names that have been in these incredible runs and are way above moving average support. This one's a little earlier on, but checks all the boxes of an uptrend with strong trend, strong momentum, and the moving averages all sloping in the right direction. All right, final example I'll share with you. I would argue kind of maybe not at the right moment, but I think it's an important example to review. This is Darling Ingredients. This is another mid-cap name in the consumer staples sector. And that's one of those sectors that I feel like a lot of investors have been ignoring for a while, and with good reasons. It's generally been underperforming. However, there are plenty of names actually looking pretty constructive. Here's how this chart compares to some of the other charts that we've been talking about. Instead of breaking out or putting in a pattern of higher highs and higher lows, this is more consolidating, right? So think about that phased approach we talked about on the previous chart. Here in the first quarter, we have a clear accumulation phase. Higher highs, higher lows, moving averages all sloping higher, the price above all of them. RSI very high, actually often well above 80, which is an extremely overbought stock. This is a stock that's going up and going up heavily. In the second quarter, look at how things have changed from a clear accumulation phase to more of a consolidation phase. As a matter of fact, we could draw a rectangle and capture most of the price action here in Q2 because we have a pretty consistent level of resistance. The stock's traded up to 65 a couple times and has pulled back every time. We also have a clear level of support because the stock has pulled down to around 57 or 58 a couple times and has held every time. Now, unfortunately, we're at the lower end of this range. So for me, When I'm looking at some of the other charts and it feels actionable because we're just breaking out of resistance, we're just starting to rotate off of a higher low. This is a stock that's actually showing tactical weakness. We can see that it's broken below the 50-day moving average. It's rotated lower from there. The RSI pushing below 40, which means the momentum is starting to wane. The relative performance is weakening, telling me that this is a stock that's underperforming. For me, I tend to be a little more conservative. I probably look for a pullback to make some sort of some sort of stable point. I'm looking for some new support if this current support level does not hold. So if we break below 57, which we appear to be right in the process of doing, I would look for further deterioration. Maybe I would use something like Fibonacci retracements to identify some short-term support. Of course, the 200-day moving average looming large right around 45, 45.50, and that could be a level to watch as well. So for me, the fact that it's breaking short-term support tells me I probably want to hold off a little bit. Look for new signs of accumulation. At some point, we will put in some meaningful low. At some point, we will rotate from distribution to accumulation. And by looking for the price itself, by looking at the momentum to see when it rotates higher, to look for an improvement in relative strength, that is where I can identify some good opportunities on a chart like DAR. So there you go. Those are 5 stocks that I'm watching, 5 stocks that I think could be compelling depending on where they're at in their particular phases. But all of those names I found using the Seeking Alpha platform to scan for strong quantitative rating names that also have good momentum. Then I'm looking at the charts one by one to identify some actionable opportunities. That allows me to filter between the stocks that I think could be a good actionable play versus ones that I think I might want to hold off on and what levels I might want to look for. You can recreate this sort of process if you go to Seeking Alpha, and you can get there by going to marketmisbehavior.com/SA bundle. And what I wanted to tell you is they're actually doing their summer sale, that is, right now, and actually providing a bundle of the Seeking Alpha Premium, which means you can get to their quant model, get to their scan engine, and a lot of their proprietary research, but also Alpha Picks, which is where their quant team actually hand selects 2 names every month to review and dig into a little bit deeper. So if you're looking for looking to surface some interesting names using that quant methodology, you can let the experts help you along your way and just give you some ideas about how to use the process a little bit more effectively. Again, they're offering a summer sale right now for 25% off a new account. You can find more information at marketmisbehavior.com/SA bundle. That'll do it for today. My name's Dave Keller with Market Misbehavior, reminding you it's always a good time to own good charts. Take good care, folks.